Okay, we've clicked on the record button and we can get started. So welcome to our webinar this month. You can see there by the topic, investing in Africa. Some of you might not know that this month of May is recognized as Africa Month. In fact, yesterday was Africa Day in Namibia, so they celebrated a public holiday. So the 25th of May every year is regarded as Africa Day. So the whole idea with Africa Day is that it's a time when the continent of Africa obviously commemorates the founding of the Organization of African Unity, or the OAU, way back in 1963, which is over 58 years ago. So this month we focus on the opportunities that Africa presents for prospective investors. So here's my agenda. What we're going to discuss. There we go. So the whole idea here is obviously focusing on opportunities in Africa. So before we really get into the nitty-gritties, let me introduce myself. My name is Sean van den Berg. I'm an investment specialist here at PSG Wealth. My objective today is to explore investment opportunities that's on the African continent, specifically, obviously, opportunities for South Africans on the Johannesburg Stock Exchange through either shares or unit trusts or ETFs. Okay. So there we go. So there's African countries aren't getting as much as they should from foreign direct investment, hence this presentation, number one. But you can see they're investing in Africa's sound business and sustainable corporate strategy. Why do I say that? This is from, if I remember rightly, there we go. Yeah, it's a website. So there's quite a few reasons why we say it's a sound strategy. Africa is the most profitable region in the world. Africa's economic growth prospects are among the world's brightest. Africa's growing youth population, and we'll be discussing it again in future in further slides, amidst a aging population, is in most regions constitutes a formidable market. Africa's youthful population, as I say, we'll be touching on that again just now, contributes to a abundancy of labor. So obviously, any company that's involved in labor-intensive industrialization, this will obviously lower your production costs, and obviously the benefits far outweigh the cost of doing business on the continent. Africa's largest deposit of natural resources promises a bright future for developing value chains, and we'll also be touching on that again just now. Emerging domestic developments lend credence to actively engaging Africa's economic transformation agenda, and we'll be touching on that also in a bit more detail. So Africa is shifting from one of what we call deficits and gaps to one about opportunities, prospects, ventures, and creativity. And I'll be expanding on that also a bit later. That's not news for companies that are already paying attention to opportunities in Africa and are invested here. The fast-growing youth population, the urbanization expected to drive over 50% of Africans to cities by 2050, and the Africa's formalizing economy are all well known. These trends and other developments have driven half a century or more of growth in Africa and will continue to do so. Okay, so let's look at 6 reasons why invest in Africa. So before we get into that, I got a lot of this information from what we call the World Economic Forum. Just first thing I want to acknowledge that it's important to acknowledge that Africa does test investors' patience. So before we just get into that, I just want to do 2 quick little polls with you guys, make it a bit more interactive. Let me just get my cursor here. Where's my cursor? There we go. Oh, come on, where's my cursor? It's hiding away from me. Sorry, guys. So let's look at quickly a quick little poll. So very interesting. Just very quickly. Have you ever considered investing in Africa? Okay, so either yes or no. You get some contributions there from you guys. Okay. Wow. Okay, quite interesting. 75% of you say yes and 25% no. Okay, that's working on about 61% of you that have voted. Okay, well, interesting. Okay, so that's just my second one. Those of you that have not voted, um, let's look at the second one. What has prevented you from getting involved? You know, was it a lack of opportunities? Are you worried about the risk or the other criteria? Okay, so I'm talking about the 25% of people that, okay, so majority obviously are worried about the risk. Okay, understandable. Okay, cool. So 73% of you say you're worried about the risk, and 7% say other. Okay, obviously, I'm not going to go into too much detail on the other, but that's quite interesting. So 75% or 73% rather say it's you're worried about the risk. Okay, cool. Appreciate that, and thanks for participating. So before we get into as I say, the nitty-gritties, why to invest in Africa, as I say, it's there are Africa does test your patience. Time horizons and return models that fit other markets do not always apply here, or work here rather. Even the most experienced, sophisticated companies are forced to recalibrate. And I remember a few years ago, Nestle back in 2015 had to announce a 15% cut in their labor force across 21 countries. So deficits remain. What's important is that investors now realize there is money to be made for those bold enough to help close the gaps. As that takes place, the promise of greater prosperity for Africans and African businesses will be realized. So here's if I can get, there we go. Quite interesting little diagram here that compares Africa's competitive landscape to international comparison as such. You'll see that the two ones I want to highlight is obviously sub-Saharan Africa and North Africa. So it's this purple line, which is the sub-Sahara. And by the way, you can see at the bottom here, sub-Sahara with countries that it covers. It's obviously most of the countries very close to South Africa. And in all the North Africa, we're talking about Algeria, Egypt, Mauritania, Morocco, and Tunisia. But you can see on all these criteria, we still got a long way to go. And I presume, or not presume, it's my opinion, I think there's a lot of opportunity in that. Obviously with infrastructure, there's a lot of opportunity in education, especially this, goods market efficiency, obviously the value chain we spoke about just now. But this diagram highlights opportunity. This is what it's all about. So the 6 reasons that you are investing in Africa. First of all, Africa is diversifying. We're moving slowly away from or beyond the commodities. Although it is still a big commodity play. A lot of the companies on the JSE that are exposed to Africa are more commodity players. We're moving away from that, and it's still in its early stages. We're seeing a restructuring where the populations are coming back to the countries, and obviously they're bringing back their skills and talent. So they're acting as first movers. You can call it first movers, and they're investing back in their own communities. That's quite interesting when I was doing this research. So at the same time, African countries are beginning to place bets on non-commodity areas where they can be more competitive. That's also quite interesting. So digital transformation, and this one I think is a lot of opportunity, digital transformation. Do you know that Africa leads the world in mobile adoption? I did not know that. Which continues to offer the biggest cross-sectoral economic opportunities. And we'll look at companies like Vodacom and MTN and their exposure in Africa. But it's interesting that mobile payment networks is a big opportunity there. So that was pioneered in East Africa, specifically in obviously Kenya. And this obviously opened a lot of opportunities for the markets. Companies such as pharmaceutical company Novartis, they're using mobile communications to manage the supply chain. And Olam International, which is a big major food and agricultural business, they use mobile to reach the new African suppliers as well as the farmers. So mobile is one area where Africa has pushed beyond the boundaries in the developed world. In Africa, tech incubators are pushing to innovate. So there, I think, is a lot of opportunity. So changing customers. With the growth of Africa's middle class, we're seeing development of new expectations. The educated, as I mentioned, the educated urban professionals are young, brand aware, and sophisticated in terms of consumption. And any company that's the retailers and consumer brands, they want to anticipate and obviously drive buying preferences in fashion, home, and lifestyle products. We'll talk about some of those retailers. They'll take advantage of that space. Trade barriers, and this is where something that I presume OAU will be pushing for is the trade barriers are falling. The 54 nation continental free trade area, this is Africa's own mega trade deal. Even the smallest African country should be benefiting from this. If duties are lowered and incentives introduced, manufacturers could see benefit from setting up production and assembly operations in multiple African countries. Okay, so this could lead to development in electronics, machinery, chemicals, textile production, and obviously processed food. We'll be talking about some of those food producers just now. So as a first step, I think that free trade between Africa and between and within the African economies blocks would make a big difference. Africa at this point in time only shares 3%, a meager 3% of world trade. Okay, so again, I think there's opportunities there. So there's a lot of ways to go. Connectors, and this is one of the downsides of this whole thing, is Africa needs more connectors. We need more roads, rails, ports, airports, power grids, and IT backbone. So yeah, the lack of infrastructure hinders the growth of imports, exports, and obviously regional business. So if you're involved in that kind of industry, there's a lot of potential there too. And obviously also this whole lack of infrastructure leads to a lack of efficient storage and distribution. So we know a lot of these countries are landlocked. Yes, so there's a lot of expansion happening on the ports and things like that. But yeah, the landlocked countries are being hurt. Do you know that up to 50% of African fruit and vegetables spoil before reaching their markets? Okay. Sustainability can lead to sustainable development. Okay, so we're talking about energy, technology, supply chain development, all those kind of things. African countries can learn from developed countries and then obviously fashion to their own answers and then obviously embrace those technology and ideas. Another big advantage, we don't have any historical imprint here in Africa, so they can break free from that and develop more flexible fuel grids apart from obviously oil and gas that we have a lot, but there's also abundant wind, solar, and hydro and bioenergy they can take advantage of. So another thing also is the unused or poorly used arable land, which can use a lot. We can use a lot towards obviously agricultural breakthroughs and leading towards productivity gains, especially in food production. So there's just some of the opportunities. So how do we take advantage of that? So if you're interested in investing in Africa, here's how. Business leaders are hungry for vibrant new markets. Consumers know the reality. Globalization means there are too few remaining frontiers. As the developed world matures and becomes increasingly difficult to trade in, as a result of factors such as legislation to terrorism, opportunities for corporate growth are limited. There are too few places where entrepreneurs and businesses with ideas and an appetite for risk can bring value and find long-term growth if they are persistent, creative, and determined. But there's something else they know. Africa is still such a place. Okay, so what I did with this exercise here, I looked at a whole lot of different companies. This is very time consuming. Obviously, South Africa, a lot of the companies on the JSE are more commodity oriented. So the big play in Africa is commodities. So we can see what I've done here is the industry, company, and then country. Just looking at diamonds, we got Anglo American as a big exposure to, well, they own 85% of De Beers. where the other 15% is owned by Botswana government. But they operate mainly in Botswana and Namibia. And you'll see a slide just now, the contribution compared to Canada and Africa. You can see a lot of obviously the commodity players are in the gold space. You've got Anglo Gold Ashanti, Tanzania, Ghana, Guinea, and the Democratic Republic of Congo, DRC. Goldfields is quite involved in Ghana. And then we got a company like Glencore, that's also heavily involved in DRC and Mozambique. And then BHP Billiton, I'm just obviously focusing on African footprint. They're involved in Mosul in Mozambique, as well as Algeria with the on the petroleum side. Okay, so yes, Anglo-American and the exposure with De Beers, as I mentioned just now, they own 85% of it, and 15% is owned by the Botswana government. So yes, there was a decrease in draft production. This is according to the last financials. You can see there that Botswana and Namibia decreased by 12% and 34%. Okay, and South Africa came up with 55. That's why we only had a 7% growth. Okay, but the two together, Botswana and Namibia, contribute 74% of the carats. Okay, in diamonds. That's looking at Anglo Gold Ashanti. And I'm just doing a snapshot. This is until 31st of March, just off 352,000 ounces of gold. Okay, you can see how it's broken down there, all the different contributors. Whereas, so we're talking about 352. South Africa is still obviously the biggest, 588 ounces. But compare Africa to Australia, for example, 104 there, and in the Americas, and that was 132,000 ounces. And that was broken down. I was quite amazed how big Brazil was, 98, just following behind Australia, and Argentina coming with 34. Okay, so Africa is still a big contributor to it. We're talking about 43%. Okay, so yeah, it's still quite a big contributor to Anglo Gold Ashanti's gold productions. Okay, so yeah, we're looking at communication. I mentioned just now, there's also a very big footprint, and obviously MTN is a big player, especially up north, as well as Vodacom. So we'll touch on Vodacom. You'll see there's two slides now, but heavy involved all over Africa, Vodacom and MTN. If you look at MTN, for example, 32% of the business, 32% of the business. If I bring my cursor in here. Okay, let me bring my, bring my little pointer. Cool. Okay, so 32% of revenue comes from Nigeria, okay, as opposed to 25% from Africa. You can also see the rest, yeah, 90%, which is Ghana, Uganda, and then we've got all the rest of them. 15% is from Cameroon, Cote d'Ivoire, and then Syria and Sudan contribute another 5% there. So quite interesting to see that Nigeria, and obviously most of us would have known that Nigeria is the biggest player, biggest contributor for MTN Group. MTN, by the way, in their last financials, their subscribers increased by 28.8 million to just under 208 million, and that's in 21 markets. Okay, but they're very much involved in Africa. If you look at what's happening with Vodacom, oops, let me just bring Vodacom in. Yeah, cool. There we go. That's Vodacom. So again, compared to South Africa, not as big, the international side. We're talking about the international contributions, and that was only 1.6%, whereas Africa was 7%, South Africa rather. So yeah, there was a decrease there. But what else interesting to note, but especially with Vodacom, they have an investment in the company called Safaricom. This contributed 30.4% to their profits. They have a new joint venture in a thing called M-Pesa. Safaricom, by the way, is a listed Kenyan mobile network operator. They're the largest telecommunications provider in Kenya, and one of the most profitable companies in East and Central Africa. But what's interesting to note is that M-Pesa is a mobile phone-based international money transfer service. They do more than 14.7 billion a month in transactions. Okay, they have 40 million customers that are transacting across Vodacom's operations, and this generated a revenue of 16.2 billion rand for Vodacom. And I think that's still got a long way to go there with opportunities. Okay, so that was quite interesting when I was doing my research. And by the way, when you do this kind of research, the best source of information is the company's financials. You go to the company's website, go look up the investor little tab, and then dig into the financials and go read through that. That's how I got all this information. Okay, so let's talk about food producers. What comes to mind, first of all, is Tiger Brands, and Tiger Brands has exposure to a lot of companies and countries around Africa. Just go the other way again. So in West Africa, obviously Nigeria, they're involved in Kenya. So you can see, just get the other way. Keeps on popping up. So you guys, cool. Okay, there we go. Yeah, so they were talking about retail and food drug retailers. What comes to mind is ShopRite, and this is through the OK Furniture and Power Express. They're very much involved in Angola, Mozambique, Namibia, and Zimbabwe. Sorry, Zambia. Whereas Pick n Pay through the TM supermarkets are mainly involved in Zimbabwe. And obviously, as I say, I haven't done all the companies. It was very time consuming. I'm just highlighting the opportunities of the companies. Oh yeah, because of time constraints. The Fishini Group, it's quite interesting. They've got quite a footprint in Africa. Namibia, they've got 103 stores. Zambia, they've got 31 stores. Botswana, 27. Lesotho, 12. Swaziland, they've got 12. And in Kenya, they've got 4. If you look at, this is the food and on our PSG website, this is the food and drug retailers. You can see down at the bottom here, Pick n Pay, get a PE ratio of 29.5, PEG ratio 79. Whoops. This is from a valuation point of view. So they're not cheap, they're not undervalued, they're fairly valued. But compared to Pick n Pay to ShopRite, Pick n Pay is still cheaper. But just understand that ShopRite has a much bigger footprint across Africa. Okay, so this is a tool you can use once you've decided which company to look at, dig a bit deeper. Now you start looking at valuations. So looking at financials, and again, I've only touched on one company that came to mind, Standard Bank, and I've always known Standard Bank is heavily involved in Africa. They trade through a lot of countries, Botswana, DRC, etc. Okay, interesting note there, if you look at, again, on the value filter, look at all the different banks. Standard Bank is cheap. From a valuation point of view, you can see they're undervalued. So a 69 PEG ratio compared to like First Rand and Capitec, etc. Obviously, the cheapest is Nedbank. And I didn't go look into Nedbank, but I know that Standard Bank is the biggest and has the biggest footprint in Africa. Okay, yeah, Standard Bank, and you can see the contribution from Africa. That's South Africa, total revenue. So the Africa region contributed 44 million. Okay, and then you can look at all the others. Okay, so that gives you a bit of idea, the opportunity for growth in Africa. Link mobile banking, and we've got a long way to go. Yeah, I'm looking at also, the ones that came to mind was Spur Corp in the leisure and travel industry, or sector rather. Spur Corp, heavily involved in Botswana, Ethiopia, etc. Famous brands, which is the Wimpies and the Mugg and Beans and things like that. Again, 283 restaurants across Botswana, Ethiopia, Kenya, and Nigeria. And again, you can see I've done a comparison here. There's Spur, they're not cheap, they're still fair value. Okay, they're not a value stock, they're more growth stocks, but compared to famous brands, unfortunately we don't cover them, but you can see the PE ratio 9.7 compared to 9.7. So Spur is still cheap from a valuation point of view if you're looking at just the PE ratio. Okay. We just get some water here quickly, please. So that's going through direct share investment. If you've got a share trading account, you can buy into shares. You can also get exposure to these African markets through a basket of shares through ETFs. There are regional, what do you call regional ETFs? These are there's two available on our platform, or two available in South Africa. You got the Cloud Atlas AMI, which is giving you exposure to the top 50 African companies, and you'll see in the next slide, as well as real estate. There's only two that are based what they call regional, and I explained that geographical classification just now. So yeah, it's looking at the Cloud Atlas AMI Big 50. You can see the exposure here. Okay, foreign equities is 79%. But their big exposure is to companies like Nestle Nigeria. They've got a big exposure to the copper belt. Oops, sorry, I went the wrong side. The copper belt, that is mainly in Zambia, and Nico Holdings. Okay, Nico Holdings up there, a bit higher. Yeah, Nico Holdings is based in Malawi. Okay, so you can see you're going to get exposure to these different companies. Through the real estate, the property ETF, you can get a big exposure to, again, to a lot of these companies called, for example, the Doja Property Group. They're based in Casablanca. Oryx Properties is based in Namibia. Palm Hills, they're involved in Egypt. Okay, again, you can see a big exposure there to foreign equities. Another way of getting exposure is through collective investment schemes or unit trusts. So these, what do we call three tiers? So tier one gives you the geographic breakdown or the geographic nature. This is where to invest. So you got South Africa, you got worldwide, and you got global and then regional. So we're focusing on the regional. And then from regional, obviously, it breaks it down a bit further. But again, there are two available in South Africa that you can invest in. First of all, the EPSA Africa Equity Feeder Fund, as well as a Redurius, I don't know how you pronounce that, equity fund. But anyway, yeah, you can see the EPSA Equity Fund. The big exposure is to Egypt. 30% is exposed to Egyptian shares. Okay, and in the other one, also big exposure, 38% exposure to Egypt, and then Kenya and then Morocco, etc. But those are the two ways if you want to go through collective investment schemes, either ETFs. And by the way, on our platform, PSG Wealth platform, ETFs trade like a share, so that's the way you'll get involved with that. On the unit trust side, so there are the two funds there for you to look at. Okay. So guys, that was very, very quickly, obviously with time constraints. Let me see what kind of questions you guys have. Cool. Let me see what questions. No questions. Here's a question from Bafana. How do I invest directly on the Egyptian stock exchange? Unfortunately, unless you are Egyptian, it's not available on our offshore fund, offshore trading account. So it's not one of our allowed exchanges. So the best way to get involved there, Bafana, is through unit trusts or ETFs. So that's how you get exposure to those markets. Okay. Here's a question from Jan. What other companies have operations in Africa? I presume you mean JSE or consumer. When I went through all these companies, the process, best thing to do is just create a watch list of the companies that you would be interested in, and then go look up the company on the website, and then look at the financials, then dig a bit deeper into the operations, what they call the footprint. When I Googled this, it was not the easiest information to find. Roland, how do these investments form part of 10% investment in Africa in Regulation 28? It depends, obviously, having exposure to those two funds. Those are the only two funds I came across that have exposure to that. But obviously, you can create your own Regulation 28 fund if you want that, Roland. Okay. Jacques, have you got any thoughts on non-JC listed if you're European or US companies looking at Africa? Sorry, Jacques, no, I haven't done any research on that, so I can't really answer your question. But I can do it for you and then come back to you through email. Okay, so that looks like all the questions. Cool. Okay, guys, let me just wrap this up quickly. I see we're going over time. So, quick summary. Okay, the 6 reasons, obviously diversification, digital transformation, which I think is a lot of opportunity there. The trade barriers, we'll see what happens on that side. Connectors, especially on the road, there's opportunities there. And then sustainability. So the 3 ways to get involved is JC listed companies, and I've only highlighted about 6 companies. I think there'll be more. But the easiest way to get involved is through ETFs, those 2 I mentioned, as well as a unit trust, having exposure that way. So from my side, guys, thanks for being on this webinar. Those of you that want to have exposure to shares, consider maybe opening up a share trading account with PSG. There's a link to open up a share trading account with PSG. Those of you want to have exposure to the unit trust, that's a link to the voluntary investment plan, which are unit trust. As I mentioned just now, ETFs trade like shares, so you can trade through our share trading account. Okay, but guys, as I say, thanks for being on this webinar. Hopefully the webinar recording will be able, the presentation will be sent out latest by Friday. But from my side, thanks a lot. This is how you can contact us, wealth@psg.co.za or 0860 000 368. Okay, guys, but from my side, thank you very much for being on this webinar. Until next time, bye for now.